Bitcoin miners as new age central banks. The path to central banking through Bitcoin-backed securitization. Introduction: the evolution of Bitcoin miners. Bitcoin began as a decentralized peer-to-peer payment system envisioned by its anonymous creator, Satoshi Nakamoto. However, its role has transformed significantly over time, largely due to a community-driven narrative shift. Bitcoin is now widely perceived as digital gold, a scarce asset providing a hedge against inflation and an alternative to fiat money. This shift has profound implications not only for Bitcoin itself, but also for the role that miners play within its ecosystem. What began as a decentralized network with participants acting as independent miners could potentially evolve into a structure where these miners operate akin to central banks. By leveraging Bitcoin's economic properties, miners could issue securitized debt backed by their holdings, positioning them as custodians and issuers of Bitcoin-backed assets. This model signals a potential transformation in both decentralized finance, DeFi, and traditional finance, TradFi. Securitizing Bitcoin, a new avenue for miners. Michael Saylor's MicroStrategy has pioneered the model of Bitcoin-backed securitization by issuing convertible bonds and securities based on its Bitcoin holdings. This approach has proven profitable, enabling MicroStrategy to raise capital without having to sell any Bitcoin, a strategy that could be replicated by Bitcoin miners. Miners could use their Bitcoin reserves as collateral, issuing bonds to fund operational expenses such as electricity and equipment. Rather than liquidating their Bitcoin, they could access capital markets, creating a sustainable revenue stream, and shielding their holdings from short-term price fluctuations. This shift from selling mined Bitcoin to leveraging it as an asset base represents a pivotal transformation, turning miners into financial entities that maintain and grow capital reserves, much like central banks. 2. Hold to maturity, HTM, a mechanism to stabilize Bitcoin-backed debt. One of the primary challenges for any Bitcoin-backed security is Bitcoin's inherent volatility. This is where a hold-to-maturity (HTM) framework can be particularly useful. In traditional finance, HTM allows entities to avoid marking assets to market, stabilizing balance sheets by carrying assets at historical cost until maturity. By applying HTM principles to Bitcoin-backed debt, miners can issue long-term loans, such as those for mortgages or infrastructure projects, that remain unaffected by daily fluctuations in Bitcoin's price. The debt is secured against Bitcoin held until maturity, with the assumption that Bitcoin's long-term trajectory supports its value. This model could create a more stable environment for Bitcoin-backed lending, enabling larger-scale investments with Bitcoin as collateral. 3. Bitcoin as economic steel, the foundations of a new financial system. Saylor's analogy of Bitcoin as economic steel frames Bitcoin as a resilient, durable asset capable of anchoring a new era of financial products. Bitcoin's decentralized architecture, fixed supply, and resistance to inflation make it a unique asset class, one that can serve as a more stable form of collateral over time than many fiat-backed securities. Just as steel underpins modern infrastructure, Bitcoin could serve as a backbone for a new class of digital financial products. These Bitcoin-backed instruments, issued by miners or other custodians, could become the foundational blocks of a more robust, inflation-resistant financial system. Here, Bitcoin miners, operating as new age central banks, could provide both liquidity and security, becoming indispensable financial intermediaries. This content is brought to you by Bobby Giggs. Promote your brand here and reach a wide audience across platforms like YouTube, Instagram, and Facebook. Follow the links in the description to get started. 4. Custodianship and institutional acceptance, reducing risk through structure. For Bitcoin miners to assume roles akin to central banks, institutional acceptance is critical. As Bitcoin becomes a custodial asset held by major banks, custodians, and regulated entities, its volatility could be tempered, enhancing its appeal as a stable asset class. Institutional custodianship not only reduces the perceived risk of seizure, but also broadens Bitcoin's utility as a recognized form of collateral. Bitcoin miners, much like financial institutions, could hold deposits, manage reserves, and offer custodial services, establishing Bitcoin-backed loans and credit facilities that integrate with the traditional financial system. This stability opens the door for large-scale investment, enabling these new age central banks to facilitate everything from business financing to infrastructure development. 5. Regulatory and strategic considerations. Navigating the future of Bitcoin finance. As miners evolve into Bitcoin backed financial institutions, regulatory clarity will be essential. Regulators will need to address how Bitcoin backed loans, bonds, and other securities interact with the broader financial system. Should Bitcoin backed debt instruments gain regulatory approval, they could usher in a new era where Bitcoin serves as both a reserve asset and a tool for economic development. Bitcoin miners, acting as de facto financial intermediaries, would play a critical role in stabilizing the asset and promoting widespread economic integration. A potential regulatory framework that supports Bitcoin's role in long-term lending and collateralization would enable these miners to operate as hybrid financial institutions, preserving the decentralized nature of Bitcoin while interfacing seamlessly with centralized finance. Conclusion: the emergent financial paradigm of Bitcoin miners. The transformation of Bitcoin miners into central bank-like entities represents a revolutionary shift in the cryptocurrency and traditional finance landscape. By leveraging Bitcoin-backed debt, implementing hold-to-maturity strategies, and positioning themselves as custodians, miners could evolve from independent actors into stabilizing forces within the Bitcoin economy. As Bitcoin miners begin to resemble digital-era central banks, they reinforce Bitcoin's value as a long-term store of wealth, setting the stage for a decentralized financial system that runs parallel to the existing one. This evolution underscores the power of narrative. What started as a peer-to-peer payment system has, through community influence, become a new form of digital gold, with miners as its stewards. In this emerging paradigm, Bitcoin-backed securities could serve as the backbone of a resilient, inflation-proof financial future, laying the foundations for Bitcoin's role in the global economy. This exposition outlines how the path to Bitcoin-backed securitization could fundamentally alter the role of Bitcoin miners, positioning them as integral players in a new decentralized financial system. As these miners shift from resource extraction to financial intermediation, they unlock a future where Bitcoin serves as more than a hedge against inflation. It becomes the cornerstone of a global, decentralized economy.